Stephen Carroll is joining us here on set. We're going to start on Wall Street. Stephen, technology shares, they had a pretty bad day on Monday, didn't they?
They did, and it was a rout that started last week, in fact, with Facebook warning of slowing growth, but it's something that's spread across the sector since then. Technology shares now in correction territory. That's when you have a drop of more than 10% over a short period. Investors are worried that perhaps these firms' long run of growth could be coming to an end. Lauren Berstecker reports.
Another blow for the tech sector. The New York Stock Exchange's FANG Plus Index, which comprises tech giants such as Facebook, Netflix, Google, Amazon and Twitter, fell by another 2.8% on Monday, slipping 10% below its June 20th record and officially tumbling into correction territory. Amazon shares dropped by over 2%, Netflix by nearly 6% and Twitter by more than 8% Monday, a sign of increasing investor wariness towards big tech. The current crisis began last week after Facebook reported slower growth and reduced earnings, prompting a brutal sell-off that led to the company's biggest one-day loss ever. Other tech behemoths, including Netflix and Twitter, also suffered losses following disappointing earnings report and cautious outlooks on future growth. The recent drop has fueled investor concern that the tech sector, which has dominated the market in recent years, may have been overvalued. The warning bells first rang in March after the Cambridge Analytica data privacy scandal sent Facebook shares tumbling to their lowest this year. All eyes are now on Apple, which will release its earnings report on Tuesday, a potential indicator of whether the decline will continue to deepen.
Well, another big technology firm reporting today was Samsung. By contrast, a South Korean firm upbeat about its future. That's mainly thanks to its microchip business. Samsung says demand for its semiconductors remain high for both servers and mobile devices, but the company's profits did actually fall slightly compared to the previous quarter, and that was due to slowing sales of the company's smartphones, and in particular the Galaxy S9. This as the firm comes under pressure from Chinese rivals like Xiaomi and Huawei.
So how's it going down on the markets then, Stephen?
European markets opening pretty flat today. We're not seeing any great movement on technology shares, at least in Europe, after the rout on Wall Street. So small gains in London and Frankfurt, Paris in the red there. Shares in BP, we're keeping an eye on them today, opening up only slightly. That's despite reporting a surge in profits, of course, thanks to rising oil prices. Over in Asia, a fairly flat picture as well, as you can see. Hong Kong down 0.5%. Small gains in Tokyo after the Bank of Japan tweaked the monetary policy there, but nothing too much to get excited about. Let's move on with a look at some more of the day's business headlines for you now. Germany's Lufthansa has seen its profits hit by higher fuel costs and the impact of strikes. Fuel costs in the first half of the year rose by more than 200 million euros for the airline, or around 8%, because of higher oil prices. In April, Lufthansa had been forced to cancel hundreds of flights as Germany's airport workers went on strike. Nevertheless, revenues were up and the airline's outlook was optimistic. The French media group Vivendi is planning to sell up to half of its stake in Universal Music. The announcement coming as the company said revenues at the label had dipped by 1.6%. Overall, Vivendi's profits for the first half of the year were down by 6%. Shares in the company, though, trading up today. And Ryanair is facing even more disruption from industrial action. That's after German pilots at the low-cost airline voted to strike unless a dispute over pay is resolved in the coming days. The Irish carrier has already seen strike action by staff in Ireland, Spain, Belgium, Portugal and Italy this summer in separate disputes over pay and conditions.
And finally from Stephen, India has begun the world's biggest spending spree. This is on toilets.
That's right, it's all part of Prime Minister Narendra Modi's Clean India plan, which aims to install 111 million toilets by 2019. It's proved to be a windfall for businesses as well. Bloomberg has crunched the figures on this. They say that there's been an 80% jump in sales of concrete building materials and an almost 50% rise in sales of bathroom equipment. Even consumer goods groups are benefiting too. Reckitt Benckiser owns the brands Harpic and Dettol. Sales there up 11% in the past year. Plenty of money to be spent on toilets.
Thank you very much, Stephen. Just close the lid on the way out, will you?
Good advice.
Yes.